Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing some technical analysis on Bitcoin and the cryptocurrency market. I want to talk about that inverse head and shoulders pattern that we've been following on the Bitcoin chart over the last couple of days. I want to break that down, talk about that pattern, and talk about where I think that's going to be leading Bitcoin's price action in the next couple of days. And of course, we also have to talk about a very important event coming up in about a month. On August the 10th, the SEC is going to be making a very important ruling for the Bitcoin and cryptocurrency markets. They're going to be deciding whether or not they're going to be accepting a proposed Bitcoin ETF proposed by Van Eck a little over a month ago. If this does get accepted, this is going to be a big deal. This could be the catalyst that we need to see a proper bull market form, at least a rally form, leading into a potential bull market in the second half of 2018 and on into 2019. We're going to be talking about all of that and more in today's video, so if you enjoyed today's video, definitely consider dropping a like, hitting that subscribe button, and smashing the notification bell. Guys, we do cryptocurrency videos every single day, and I wouldn't want you to miss any of them, so let's get right into it. Bitcoin is currently trading just under $6,300 with a daily volume of about $3.5 billion. That's not that great, but that's pretty typical for what we've seen in the last month or so. Bitcoin is up about 1.3% in the last 24 hours, and likewise, the rest of the cryptocurrency market is also green. We don't see very many losers right here. If we sort by that, we see about a dozen losers, but mostly the market is up, if not up by that much. We do see about 5 or 6 double-digit gainers here today. Not a lot of movement, but like we've talked about in other videos, guys, normally when Bitcoin moves in a certain direction, the rest of the cryptocurrency market also moves in the same direction, but moves a little bit further in that direction, and that's exactly what we're seeing today. Bitcoin's market capitalization is still, of course, over $100 billion. That's a very important level of support that we want to watch out for. Another important market capitalization related level of support that we want to look at is this one up here. The entire cryptocurrency market is currently valued at $250 billion. Guys, I want to give you a little bit of perspective and take a little bit of a tangent here. I remember a little over a year ago when when the cryptocurrency market capitalization was at $250 billion. It was a tenth of this. That wasn't that long ago. So guys, just because the market's going down, just because we're cooling off a little bit, don't worry about it. I think the market's going to be rebounding probably sometime in 2018. It may take as long as 2019, but I think things are going to be looking up in the long run for Bitcoin and the cryptocurrency market. We're going to be talking about that this weekend. Bitcoin's market dominance is just over the magical 42 number, hovering around 43%. We've talked about how we don't really want to see that continue to rise because typically when Bitcoin's market dominance is continuing to rise, that correlates with a downturn in Bitcoin and total cryptocurrency's valuation. Let's jump over here to the chart and talk about this inverse head and shoulders pattern. Now guys, of course, in the last couple of days, Bitcoin did break a very important level of support that it had. It was getting support on the 20-day exponential moving average, which is this yellow line right here, and then it fell below that, and it also fell below the 21-day simple moving average, which is most unfortunate. Those are important levels of support, and we even got a little bit of resistance right here, but there is a silver lining to the pattern that we've been seeing in the last couple of days, and that is, of course, the inverse head and shoulders pattern that we've been talking about on the channel here for a little while. We see the shoulder right here, the head right here, and the shoulder right here. Now, there are some people saying that this is already invalidated because of volume. I don't think that I don't think volume confirmation is anywhere near as powerful as people think it is, because I think a lot of people trade this and don't even look at the volume. I've talked about on the channel before about how the way that I determine how powerful an indicator is on its ability to affect price action is by how much trading volume is around it. I don't think that a market has any intrinsic properties, really. It's really just based, the way the market moves is just based on how people are trading it. That's all the market is how people are trading it, how much volume is trading it, manipulation, etc. So I don't think everybody who uses the inverse head and shoulders or the head and shoulders pattern necessarily looks at the volume, but if they did, they would see that the volume has been starting to cool off a little bit. It has been rising on average a little bit, but as we look at the peaks here, it has been cooling off from peak to peak, which is typically something like what you would want to see. But nevertheless, what we do see here is we see the left shoulder right here on the inverse head and shoulders. We see the head, and then we also see the shoulder over here. Something that someone pointed out in the comment section a couple days ago. I think this was yesterday. I don't remember who commented this. If you're the one that posted this in the comments, tell me in the comments, and I'll put your name in the pinned comment. I'll give you a little bit of credit. How about that? But what he pointed out was that if we take kind of the width of the left shoulder and then we drag this over, we get about the width of the head. And then if we were to drag this over again, over to where the beginning of this right shoulder is forming, then this should say that in a couple of days, about a week, Bitcoin should finish this shoulder and be back up here at the neckline. So if the head and shoulders were to play out in more of a symmetrical way, then we would probably see Bitcoin coming back up to its neckline in the next couple of days, probably around July the 20th. That's something interesting that we'd like to keep an eye out for. The RSI has been continuing to cool off. This is something that I like to see, because if a market just goes straight up and a market just does that number and goes like that, the RSI is going to get overextended very, very, very quickly. You want to see the market kind of go up in a gradual stair-step pattern. That's kind of what we saw when Bitcoin was cooling off. We saw kind of this gradual stair-stepping pattern. We saw a downtrend, that kind of this little stair-step pattern. You see we had a little jump ups, so when we're going up we also need to have little cool-off periods so the RSI can reset and so that we can continue to go up in a healthy way. So I'm not really all that concerned about this price action. It's not a bad thing that we're seeing a couple of days of consolidation after seeing a nice little rally in the last couple of weeks. So long as we don't come down here and set a new lower low, or so long as we don't come down here and break $6,000, I think we're still doing pretty well. I think in the next couple of days, we talked about this in yesterday's video, how the end of the month is going to be a very important time, because we're coming into kind of a support and resistance zone in between the 50-day moving average, which is this red moving average right here, and $6,000 as a level of support. I'm thinking we're probably going to go bullish out of that because of the way the market's turning around, and especially if this Bitcoin ETF proposal does get accepted, I think we're going to see a rally forming in the next couple of months that could potentially lead us all the way back up to the downtrend in the descending triangle and lead us to new highs somewhere around $10,000, and hopefully starting in a bull run. If we can break this level up here around $12,000, if we can break that, I'm certainly believing that a new bull run is forming. It could take a year, it could take a month, it could take Bitcoin being, it could take the SEC's ruling on the Bitcoin ETF being approved for that to actually happen, but we're going to keep you guys up to date with that on the channel. Let's move over here and talk about this Bitcoin ETF that's been proposed. This is an article that I read in the first video I did on this. You guys can go watch that video in the top right if you want to get more information about the Bitcoin ETF. I really go over a lot of the fundamentals and a lot of the proposed features of this Bitcoin ETF. I'll go over a lot of them in today's video, but if you guys want some more information, go ahead and watch that video up in the top right. I'm going to go ahead and read through this. This was posted about a month ago. This isn't in relation to the actual approval process, but this is something that will give you guys an idea of what we're talking about. VanEck, along with SolidX and Bank of New York Mellon, will join together to create the first Bitcoin ETF. If approved, the trading will begin sometime around Q1 of 2019 under the symbol XBTC on the CBOE BZX exchange. Will the saying "third time's the charm" hold true? VanEck, an investment management company, will try for a Bitcoin ETF. For the third time with the help of SolidX and Bank of New York Mellon. According to the filing, VanEck will market the ETF while SolidX will create the underlying asset, and the Bank of New York Mellon will be the custodian. We've talked about this on the channel before. What I also want to talk about here is, while this is great news, there are a few unfortunate caveats. We want to go over those caveats. The first big one will be that the share price will be around $200,000. This is dated. It's not actually going to be $200,000 a share, because of course if a share was always the same price, then what's the point of investing in it? The way that the share price is going to be calculated is that each share is going to be worth 25 Bitcoin. So if we were to take $6,000 and multiply it by 25, there's your share price. It'd be, I'm not going to do the math right now, it's somewhere like $170,000. You guys can do the math on that. That's one of the main caveats, is that the Bitcoin, it's going to be based on 25 Bitcoin. The share price, it's not like Bitcoin where it's divisible down to 8 digits. That's the share. So that's not something that we're going to be able to invest in. This is not a retail level ETF. This isn't like one of your gold ETFs where people can buy in for 20 or 30 bucks. This isn't one of those kind of ETFs where everybody is going to have access to it. This is for institutional and accredited investors, people that have a lot of money and are actually going to be able to pour a lot more money into the market, and that are less likely to get screwed because they don't know what they're doing. If you're moving around hundreds of thousands of dollars worth of valuation into investments, then hopefully you know what you're doing. If you're an accredited investor and you're an institutional investor, hopefully you know what you're doing. And that's one of the points here, that one of the problems that the SEC had with the first round of ETF proposals is some of them were targeted at retail investors. They were targeted at people that were potentially going to get screwed because they might not know what they're doing. And the SEC, the last thing the SEC wants to do is get egg on its face. I think that's the exact phrasing I used in the last video on this. The last thing they want to do is get egg on their face by allowing the retail level investor, people that are going to invest $100, $1,000, $10,000. The last thing they want to do is have your grandmother getting into the Bitcoin ETF and then losing all her money, and then all of a sudden the SEC looks like the bad guy because they allowed this Bitcoin ETF to go through, and then the Bitcoin market crashes. So I am in no way contradicting, and I'm in no way criticizing the SEC for being hesitant on this, because that's the SEC's job. This is why the SEC was established back in the 30s. The SEC is designed to do this thing. It's designed to protect the consumer. So that's really the reason that this is going on. Something else that we want to talk about with the ETF is that the ETF would actually be physically backed. It's funny to say that a Bitcoin ETF would be physically backed, but because Bitcoin is digital, but It will be physically backed. For every share, there actually are going to be 25 Bitcoin held in a digital wallet or held in a private key somewhere, so that there actually is a physical backing. It's not like you're just pulling these shares out of nowhere and you're creating fiat Bitcoin, if you will. It's nothing like that. But let's go ahead and talk about the actual ruling itself. I'm going to go ahead and read from this article right here. This article will be, well, actually, I'm not going to link in the description. You guys can go type this into Google and it will come up. I promise you. There's not too many articles on this. Bitcoin ETFs have been a dream in the cryptocurrency community for a very long time. These ETFs have been good signal for the these ETFs may be a good signal for the cryptocurrency market that is in a downtrend since January 2018. Yes, the market has been cooling off quite a bit, and we very much would like to see some kind of catalyst to come in and actually kick off a new rally, or at least a new bull run, or at least a new rally coming into the end of 2018. On August the 10th, the U.S. SEC will have a decision ready on whether or not a Bitcoin ETF will be available or not. Now, there is one caveat to that. There is an extension period for 45 days that they can push that off if they need to, but they will more than likely be they'll more than likely be doing their ruling on August the 10th. If the answer is positive, the cryptocurrency market could start a new bull run and reach new all-time highs. That's a very real possibility, because, guys, one of the big deals about this ETF, and the reason that this is such a big deal, I can't stress enough how big a deal this is. The reason this is a big deal is that this is going to open the floodgates for trillions of dollars to flow into Bitcoin and cryptocurrency if the market deems Bitcoin a good enough investment. This is a big deal because there is trillions, I mean trillions of dollars parked in the U.S. stock exchange and the U.S. stock market, for example. I forget the valuation of the U.S. stock market. It's like $30 trillion or something. We could easily see hundreds of billions, if not trillions of dollars of that valuation moving into Bitcoin. And every dollar that moves into Bitcoin doesn't increase the market cap by $1 necessarily. It can increase the market cap by $2 or $3 or $5. I'm not going to do the math on that right now. But you can see the market cap increase quite a bit more than the actual money that goes in because of the way the market works. So this is a big deal, and there is a lot of money sitting in institutional investors' pockets that could be going into the Bitcoin ETF if they deem that the correct thing. That isn't right now, because it's not a very good idea to put your money into something that is so unregulated and is just the wild west of Bitcoin and cryptocurrencies. I don't blame a lot of institutional investors for not wanting to get into Bitcoin and crypto just yet. Let's move over here to this article, and I want to scroll down here and read a comment that someone said. He said, for the SEC to, and excuse this guy's typing and everything, he does have a good point, though. For the SEC to deny this proposal would be contradicting. This is because the Bitcoin ETF encourages legal investment that follows security law when investing into the ETF's shares. Basically, what this guy is talking about here is that it's actually in the best interest of the SEC to actually approve this, because it's going to mean that a lot more of the trading is going to be going through the Bitcoin ETF than perhaps traditional cryptocurrency markets and traditional centralized or decentralized exchanges. So it would be much easier for the SEC and the IRS to track where this money is going, so it's easier for them to tax it, because everybody knows the government loves to tax you and then waste all your money. That's essentially what the government's point is. So they would be able to do that much more efficiently if there was an ETF packaging Bitcoin. If Bitcoin was packaged into an ETF, it would be much easier for them to regulate it. It's in their best interest, because currently there are a lot of people getting, frankly, there are a lot of people getting screwed in the cryptocurrency market because they're in an unregulated environment. That's the SEC's job, is to regulate to regulate securities anyway. Securities and Exchanges Commission. That's what SEC stands for. That's their job. Part of their job is to protect the consumer, and they can do that more effectively if Bitcoin is actually packaged into an ETF. But anyway, guys, I want you to tell me in the comment section down below what you think about this. Do you think the SEC is actually going to rule positively on this? Do you think the SEC is going to give a thumbs up to this Bitcoin ETF? We've already seen cryptocurrencies get onto traditional finance markets through the futures contracts. We've seen this kind of stuff happen before, so it is a very real possibility, and I think they probably will accept this, to be honest. And if they don't accept it, I think they probably will be accepting some Bitcoin ETF proposal in the coming months and years. Guys, one of the big deals about this Bitcoin ETF is that not all, but most of the criticism that the SEC had of the original Bitcoin ETF proposals back earlier in the year and later in 2017 were things like they were targeting retail investors. They don't want to target retail investors right off the bat. They want to be able to kind of ease in, test the waters, and kind of actually get an idea of what this is going to be like before they allow retail investors into an actual Bitcoin ETF. Another thing was that they wanted it physically backed, and also they wanted to be careful about actually trading based on the exchange price, which is why this Bitcoin ETF is going to be traded based on over-the-counter markets rather than actual exchange prices, because there's less room for actual market manipulation there. A lot of the qualms that the SEC had with original proposals are being addressed by this Bitcoin ETF, and I think the SEC will probably actually go ahead and approve that. If they do, you guys can count on me making a video about it here on the channel. So if you haven't already, go ahead, drop a like, subscribe, and hit that notification bell because guys, we do cryptocurrency videos every single day, and I'll be keeping you up to date with this for as long as this is an issue in the cryptocurrency space. But like I said, tell me in the comment section down below what you think about this. Do you think this is going to go through? Do you think it's going to flop? Do you think it will have a gigantic, massive impact on the market if this does go through? Or do you think I and some of these articles are blowing this out of the water? Tell me in the comment section down below. But anyway, guys, that's going to be it for this video. I want to thank each and every single one of you for watching, and I will see you guys in the next video. Peace.